Welcome to the latest Motley Fool Scoreboard. I'm on in Chockaballoo, and we've got longtime fools Tyler Crowe and Nick Ciple giving a 1 to 10 rating to oil landowner Vitess Energy, ticker symbol VTS. First, we'll rate the strength of Vitess's business, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Both of you have 6s, Nick.
Yeah, I rated Vitess a 6. It's a company that was spun out of Jefferies Financial in early 2023 as primarily a non-operated working and mineral interest owner, so royalty company, primarily located in the Bakken oil field in North Dakota. As of its most recent quarterly report, had interest in 7,316 productive wells in the Bakken with an average working interest of 3.6% per working interest well. Vitess talks about being a quote-unquote Bakken ETF. They've historically participated in 30% to 50% of wells in the Bakken Shale region. However, following its acquisition of Crowe Energy in March of 2025, Vitess is also adding an operating component to its business, adding 65 producing wells historically operated by Crowe. Now, while this royalty business is high margin and these royalty business historically are quality businesses, I was kind of confused by the move toward operating wells. I think that's a signal towards maybe the limited quality of the assets. And also management talks a lot about how 80% of its assets are in undeveloped locations, which, long-term, maybe that's assets value you can tap into. I think it signals low quality acreage that oil companies just haven't seen as attractive to date. And if you look at the Bakken as a mature shale basin, to me, that just doesn't point toward quality. So weighing the good baseline of a royalty business against underlying assets that I don't think are that great puts me at a 6.
6 as well. No notes. Royalty companies can be sound investments when purchased at the right time, but that's normally when you go into a bar in Midland, Texas, and all the landmen are drinking from the well or the rail instead of the top shelf. So you might have to do a little deep research there. But most royalty companies work because they typically do nothing for decades except royalty checks, and that's kind of what Vitesse is going away from.
Nick, you mentioned that the quality of the underlying assets may or may not be so good. Well, if you're playing Texas Hold'em against them, what hand are they holding?
So I think it's a hand you can win with, but that you're not going to win most of the time. So let's say like 2 6s. You've got 2 6s and you're trying to show somebody you got a pair of queens, right? And that's the position I think this company's management team's in.
Excellent. Well, I overvalue 2 6s, so we'll see how we'll see if I do. But I guess you guys both gave him a 6, so well done. Management, a 10 is Warren Buffett, a 1 is Homer Simpson. This gets worse. Tyler's at a 2, Nick, you're at a 3.
So I went with a 3. It's not really anything against the leaders themselves, more their communication and just a lack of signaling to the market. I think the Crowe acquisition was a big flip-flop away from their messaging at spin, and that hurts my trust, which gives them a below average rating.
I went with 2 for similar reasons. And look, making big moves in second-tier shale basins is an aggressive bet on future oil prices. The Bakken is a tougher place because it has limited market access relative to places like the Permian Basin. And so, not a lot of companies are prioritizing up there right now. A business with a high dividend in a commodity business should, in theory, be extremely conservatively underwritten. And I don't know if this deal meets that criteria.
Let's move on to financials. A 10 is a fortress. A 1 is yikes. Not much relief here. Tyler's at a 3. Nick, you're at a 4.
Yeah, I rated Vitesse a 4 because it hasn't covered its dividend out of cash flow the past 2 years, and its margins have been falling. That said, the Crowe acquisition does further strengthen the balance sheet, brings on a $50 million net cash position at the close, and obviously brings on the operating business of Crowe. The Vitesse management points to that they're, after the completion of the acquisition, their net debt to adjusted EBITDA will be 0.3x. But again, historically, looking at the historical financials, I don't see a ton to like.
Yeah, 3, in addition to not covering the dividend, the company has also been whittling down its working capital for the past 2 years. So it's kind of been eroding the balance sheet and still not making its dividend payments. So not covering that when, as a royalty company not requiring working capital, it not great already. We start to operate wells, we're going to have to see a big uptick in working capital, which is just going to eat at cash flow.
All right, Nick, let's move on to valuation. How well will Vitesse Energy stock do over the next 5 years? How safe is it? 10's a sure thing, 1's a lottery ticket.
So I went 0 to 5% and a safety score of 3. I think I have some confidence in the royalty assets generating revenue, its operating business as it is to continue on. I just don't know what this management team is going to do to try to create value and maybe acquire better assets in the future. And that, I think, really drops the safety score significantly. It really depends on how they allocate capital, and I don't have really a confident vision of what that's going to look like.
I originally said less than 0 to more than 15%, but Anand made me actually change it to something that's within his rubric. So I went with 0 to 5%.
The entire range.
Exactly. Because Vitesse's fate is far too tied to oil prices to make like a reasonable assumption of where it will be in 5 years. It's a levered bet on commodity prices, and there are way too many variables in the oil market to reasonably determine future prices like 6 to 12 months from now, more or less 5 years.
And your safety score was 2, right?
2, yeah, like not quite a lottery ticket, but not that far off either.
Right on. Lottery tickets also have a wide range. Top it. Nick, is there a company in Vitess Energy space that you like better?
So my favorite royalty business is Topaz Energy, trades on the Toronto Stock Exchange under the ticker TPZ. It is the partner with Canada's Tourmaline Energy, the largest natural gas producer in Canada. Tourmaline owns 8.9 million royalty acres across Canada, pays a 5% dividend. I think that Western Canadian sedimentary basin is really has a long, useful life. I like what's going on in the natural gas business there when it comes to the startup of LNG Canada, and I think I like how Topaz is managed. Doesn't have as optically a high of a dividend as you see with Vitess Energy, but I'm much more confident in the business and its long-term future.
I'm just not a fan of like having my fate tied to only exploration production assets, whether it be royalty or not. So, I look for refiners, infrastructure, integrated things like that. I think one of the more diversified, like we'll say like the integrated majors of oil. I think Equinor, the Norwegian oil and gas giant, is one of the best values out there today on a capital return basis, on a rate of return on its assets, both in the oil patch and surprisingly in the renewable energy space as well.
Thank you to both Tyler and to Nick. They've given Vitess Energy a very low overall score of 3.5 out of 10, with a 6 for the business as the high average score. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Landbridge. Till then, Fool on. Ooh, I did this in 2008. Yes, the B tranche is now the AAA tranche. I got it.
Exactly.
This ends very well.